All right, so posting to the ledger. Talked about the journal and the ledger. Now we're going to see how these two books are connected so we can fully understand their roles in the accounting cycle. So if you think back to the T accounts we used before, those are simple ledgers where we could post transactions as they occurred. Now that we know how to journalize transactions, we need to determine the balance of our accounts. So we do this by posting to the ledger instead of to T accounts. We are now on the third step of the accounting cycle. Woo! Woohoo! A proper ledger is called the balance column account because it has 3 columns. There's one column for the debit amount, one for the credit amount, and one for the final balance. Posting is the process of transferring information from the journal to the ledger. Every individual account recorded in the journal must be posted separately to its ledger account. So there are 5 steps for posting that happen in the ledger. They include turn to the proper account in the ledger, record the date, record the page number of the journal, record the amount in the proper column, either a debit or credit, calculate and enter the new account balance in the balance column, and indicate whether this balance is a debit or a credit. There's also one step that's really important that happens back in the journal. So now that we've done everything that needs to be done in the ledger, we go back to the journal and record what we have posted, that we have posted the transaction. So in the journal, you go to the PR number and put the account number that was in the ledger. Now let's look at an example together. Okay, so we're going to post this journal entry to the ledger. Step 1. We're going to go to the office furniture account, so that's the proper account in the ledger. Step 2, we're going to record the date. So we see that August 14th is going to be brought down to August 14th in the general ledger account for office furniture. Now we're going to record the page number where the transaction was journalized in the journal. In this case, it's J14. Step 4, we're going to record the amount. We have to be careful and make sure we put a debit amount in the debit column and a credit amount in the credit column. Step 5, we're going to calculate the balance. So after every posting entry, we need to recalculate the balance in the balance column and indicate whether this is a debit or credit. In this case, office furniture is a debit balance. Now remember, step 6, really important, we have to go back to the journal. As proof of posting, we need to post in the PR column of the journal up here what account we just posted to. So this is posting proof, and we can go back and see how far we've posted. Now that we've posted the office furniture, we would have to go back and do bank and accounts payable. All right, so that was our example. Cross-referencing. Cross-referencing is recording the journal page number in the ledger account and recording the account number in the journal. Why do we do this? It's essentially so we can track references from their source. Entries can be followed in the ledger really easily. And it's also an easy way, as I said before, to see how far we've posted to. So if we're tracking back and forth and cross-referencing, we can see how far along we've posted. Right, so now looking at forwarding, we already discussed forwarding when we were doing our journal entries. For the ledger, on the last line of the ledger, write forwarded in the particulars column. On the next page of that account, write the previous date and balance and state forwarded again in the particulars column. To see an example, go to page 218 in your textbook. In class, we are going to be going over some review exercises to make sure you understood everything about posting. See you later.